This is David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Thursday, October 23, 2014. This is a 10-minute chart of the SPY, and I just want to explain why I have this up there, because in the middle of it's in the middle of the afternoon today, some news came out that there was a doctor that is now in the hospital being tested for Ebola. Now, he was in West Africa on a medical mission to try and help out, and I guess he was feeling ill, and one thing led to another, so he's being tested. He may or may not have it, we don't know. But the point is when that news came out, the market kind of sold off. But I thought what was interesting was the market actually made a top long before that news came out. And what happened was, now let's go back to a daily chart. And where did the market make a top was right at this pivot point here at 196.60 was the high, 196.33 was the open, and here today the high was 196.20. So that's pretty darn close to this high, and the volume on this day was greater than the volume today, and that's one of the reasons why this push today couldn't get through this level, in my opinion anyway. Now, I would have thought we would get up into this 50-period moving average, and remember I had said last night, excuse me, I thought the top end was going to be about 197 on the SPY, which would be basically this pivot high here, but that would coincide with a pierce of the 50-period moving average, and I thought that was going to be the top end, and it still may over the next day or so, but today looked like the makings of an intraday reversal, although I wouldn't call it a reversal. We just finished lower than we were earlier in the afternoon. But nevertheless, thought it was interesting, though, and we'll see what the next couple of days brings. And just so you know, from a cycle work perspective, today marks a cycle high. Now, it's a short-term cycle high, so it's a daily cycle high, and that would be due to bottom around middle of next week. I believe it was the 29th. Yes, the 29th is the number or the date. So that's on the on Wednesday. So and that could be plus or minus a day or so. You know, don't take those spot on. And this topping could be plus or minus a day or so. So not to say we can't float up a little bit higher tomorrow and maybe even pierce this level, but by Wednesday of next week, I would expect us to at least come down to this gap window here at about 191.5. Okay, so that would be a good target price for by Wednesday of next week, or lower, but at a minimum that would be a number. Now let's see if that number makes any Fibonacci sense. I don't know if it does or it doesn't. I haven't measured this out yet. Let's take it from here. Again, take it from here to this pivot. Okay, well, I'm sorry, folks. I should have drove it the other way. Okay. All right, let's try this again. Let me get the tool. I always have trouble with this this particular tool and this software. Okay, so what do we have? We have, let me get rid of the tool. Okay, let me move this over. Now, what I just mentioned to you was I thought a good level would be about 191.5, and assuming that this was the high today, and it may or may not be, but assuming it was for the purposes of this measurement, the 382 retracement would be 190.75. Okay, so 190.75 to 191.50 is a good target. Okay, could it go lower? Sure, it could, of course. But you have this 200-period moving average. Okay, that'll act as support. You have this gap window You have this gap fill here. Gaps normally get filled, okay? So there's going to be a huge level of support between 191.5 and let's say 190.5, roughly, okay? So a $1.50 spread of support in this area. So that's where I would expect, you might as well just split the difference and say the 382 retrace is the number, assuming this is the high. Okay, so let's move on. That's kind of what I see in the market. And let's move to gold. Now, gold sold off today. And, oh, by the way, before I move on to, well, it includes gold and the market. Don't forget, tonight was the solar eclipse. Now, that happened before. I'm doing this video after the eclipse. Now, that happened at 45 or 5:55. I forgot the number, something like that, this evening, Eastern Standard Time. So what happens in an eclipse is markets tend to shift, either accelerate or turn. And we'll see what happens with the stock market, because right now the futures, the ES contract, or the S&P E-mini futures contract, is basically flat. It's not really doing anything. So can't read anything into that. But I did notice, let's see if it's still, gold is up a little bit. Now, it was down today, but it's up a little bit, and let's just see. I'm looking at another chart here. Bear with me, because I want to see if I can determine if it turned around the eclipse time. It's just interesting, if nothing else. Okay, so that would be 7. There you go. Yeah. Well, maybe before. So around 5 o'clock it turned up. And so a little before, but that is just interesting to note. So I'm looking for an update tomorrow in gold, just based on the eclipse, not a technical level, just based on the eclipse. Sometimes it happens, and the stock market remains to be seen. We'll see what happens there. So gold today sold off, came basically into this 20-period moving average, didn't quite get there. That's on a daily basis, and then kind of reversed up a little bit. Now, I would look for a little more upside in gold tomorrow based on the eclipse. But, we're not out of the woods yet, but I'd still say 1270 is a top end for the time being. That's as long as we stay above this area. Drop below the 20 and all bets are off, and that's kind of the way I'm playing gold right now. But it's a no trade at the present time. Oil. Let's go to the USO chart. And oil had the bounce. And remember, last night I said that this was a low risk reward, because your out is a close below the low from the 16th, which would have been $30.20. A daily close below that low. If you took this trade yesterday, well, you couldn't take it yesterday. I told you about it last night. So this morning, oil popped a little bit. It went up a little bit today and then back down. It's still weak until you get above yesterday's high, which is 31.50. Then you're going to be stuck in the mud, and you're still even stuck in the mud until you get above this high, which is 31.92. So you're stuck in the mud for a while on the USO or oil, either way you want to look at it. What else happened today? Bond yields were up a little bit, so bond prices were down a little bit. Not much going on there. Let's just take a look at the yields. Yields are still, remember this was a crazy capitulation sell-off or rally in the bond market, sell-off in yield. And then now you're coming into this 20-period moving average. You'll probably stall out here. And if the market does pull back for a few days, it's conceivable that you can pull back in yields for a few days as bond prices rally. And then mid-next week, you might see another reversal like that. Well, that remains to be seen. There's no tradable pattern there, but nevertheless, it's just what I see. I think we'll leave it there tonight, short and to the point. I'm David Frost, MyStrategicForecast.com. This was another episode of Common Sense Market Analysis.